Thank you for watching this video. Today we will be doing technical analysis on the stock market for Monday, January 4th, 2021. And for this analysis, we will be using stockcharts.com. That is the charting service that I use and pay for, and I will leave a link to their site in the description box below this video. My name is Rodney Constable. I have over 30 years of investing experience, including over 25 years of experience trading stocks and options. I am a former financial advisor, a former vice president of a major mutual fund company, and I am the president and founder of Simple Market Signals at simplemarketsignals.com. We're going to start off with a 2-day, 2-minute candlestick chart of the S&P 500. The S&P 500 was down 1.48% today, and we closed at 3,700.65. So the reason I went with this 2-day chart is so that you could see the gap up at the open, just a little bit of a gap up at the open, and we made the highs of the day at the open, and then from there we immediately started to sell off. We broke beneath this blue line, of course, this 3,700 level, which has been very challenging for us over the last month or so, and we'll take a further look at that in the next chart. But, man, the market's just sold off like crazy. And then you can see here that right at 2 o'clock, we came right back to the 3,700 level and then got rejected from there. And then just before 3 o'clock, we had a little bit of a push, a little bit of a rally that took us back above 3,700, and we closed just barely above 3,700. And so you can see the algorithms at work here, guys. The majority of the trading in the markets these days, with all of us indexing and using ETFs and all, the majority of the trading in the stock market these days is done by algorithms, and you can really see that right here. Again, we closed at 3,700.65, so we just barely were able to hold on to the 3,700 level in the S&P 500 today. The next chart that we're going to look at is an hourly candlestick chart of the S&P 500 going back to the first trading day of November, and the blue line is still the 3,700 level. And the reason I wanted you to see this is you can see where the intraday trading was today. That took us to the same level that we were trading at the beginning of December. Okay, and you can see that really since the 9th of November, we've made very, very little progress in the S&P 500 between our highs on November 9th and the lows of today. There's just not much difference there, okay? So this is that sideways grinding, lethargic action that I've been talking about for at least a month. And if you haven't, if you're newer to the channel and you haven't seen some of the videos over the last month, I would really encourage you to go back over at least a few of my videos for each of the weeks over the last, say, 4 to 6 weeks, and kind of get yourself caught up, because I've been talking about this. But this is exactly what we're seeing here. That ever since we got up to this, right around this 3,700 level, it's just really been a grind, right? We've had a really hard time getting above and staying above this 3,700 level. So, today's price action, not good, right? When you hit an intraday all-time high on the S&P 500, and we'll take a look. We did the same thing in the Dow. We'll look at that next. And then you immediately sell off from that point. The question becomes, is this just a one-off situation, just one day, right? And we get right back to, trying to just slowly melt up from here? Or is this trying to tell us something, right? Is this going to be the beginning of further selling? And guys, it's way too early for any of us to know, but just be aware that it could be one or the other. Nobody knows for sure just yet. The next chart that we're going to look at is an hourly candlestick chart on the Dow Jones Industrial Average. Again, going back to the first trading day of November, the blue line on this chart is set at 30,000. And what we can see here is on the Dow, once we got to this 30,000 level, we have just really stalled and went sideways, right? Not too dissimilar from what we just saw on the 3,700 level on the S&P 500, except in the Dow, it's on the 30,000 level. And you can see today's intraday low was really the same as the intraday high that we saw back on November 9th. So in the Dow, we have made very, very little progress in almost 2 months, right? We've had this sideways grinding action right around this 30,000 level. We did close above 30,000 today, closing at 30,223.89. And on the Dow Jones Industrial Average, we were down 1.25% today. But again, just this sideways grinding action for almost 2 months in these major indices. So this market is just looking tired here, guys. We had an incredible year in 2020, but I think the markets are talking to us here. So let's not be too complacent. And on this chart, we can see that virtually everything in the U.S. was down: small caps, mid caps, large caps, and the DIA, the ETF that tracks the Dow Jones Industrial Average, was the best performer, only down 1.20% for the day. So large caps, small caps, mid caps, the Qs, everything sold off today. Everything was down at least 1.20% for Monday, January 4th. And within the S&P 500, when we take a look at all 11 sector ETFs for the S&P 500, we can see that the only sector that was up today was the energy sector. It was up 18 basis points for the day, but all other sectors, the other 10 sectors of the S&P 500, were negative for January 4th, 2021. So this was a pretty bad start to the year, and some of the data that I saw earlier today showed that this was the worst start to a year since the first trading day of 2001. So this is the worst start to a year in 20 years, guys. So, we don't know, right? It's only one day. We don't know whether this is going to be kind of forecasting the next 4 to 6 weeks or so, right? Do we continue to sell off? Which I think is possible, right? We're well extended. We closed last year at the all-time highs in the S&P 500, the triple Qs, and the Dow. And if you haven't seen that, again, go back and look at my video from the 31st of December. But we're overextended here, guys. From a technical perspective, we're trading well above the long-term moving averages on most any of the indexes. So let's not be surprised if we give some of it back here. And that brings me to my next point. Guys, all of us need a rock-solid stock market risk management system in place to help us manage our equity risk exposure, okay? These markets move faster and harder than ever before. There's more liquidity than ever before. Bond yields are too low to really be all that valuable to us going forward. So, I'm not going to belabor this, but if you are a financial advisor or an individual who runs any of your own money, including in your 401k or your IRA, I encourage you to pay close attention to the balance of this video, as the following information could be very valuable to you going forward. Do you know the level of risk in the stock market on an ongoing basis? Simple Market Signals. It's like having risk radar for the U.S. stock market. Simple Market Signals is less than $20 per month. Simple Market Signals is for financial professionals and individual investors. What is it costing you to not have this information? To get started, go to simplemarketsignals.com. Simple Market Signals is market-based. There's no opinions, forecasts, or guesswork in Simple Market Signals. It took me over 20 years to develop Simple Market Signals. I developed Simple Market Signals by reverse engineering the stock market, and I studied the stock market over numerous time frames, including in numerous bull and bear markets. And what I found is that certain conditions exist during these various market phases. And then based on that information, I created simple, easy to understand signals around these different phases of the market. And the thing is that most people don't know about or have access to the data necessary to do the research that I had to do to put together this model. Now let's take a look at the signals. The red signal has the highest equity risk associated with it, and the worst sell-offs, including bear markets, will happen when the signal is red. When the signal is yellow, this means that equity risk is moderate, and sideways to slightly up or down price action is very common during a yellow signal environment. The green signal is the best signal. It has the lowest equity risk associated with it, and most all upward progress in the stock market will be made in a green signal environment. Said another way, it is very hard to make money in equities unless the signal is green. Okay, a quick refresher on the simple market signals and how they can help you. The signals are green, yellow, and red. The green signal is the best risk-reward ratio for equity investors, and what you're going to find is that the stock market makes most of its upward progress when the signal is green, okay? The worst risk-reward ratio signal for equity investors is when the signal is red, and what you're going to find is that bear markets and the worst downturns in the stock market happen when the signal is red, like during the 07 through 09 bear market, as we see here. So again, the best risk-reward ratio signal for equity investors is when the signal is green, and the worst risk-reward signal for equity investors is when the signal is red. Now let's take a look at the first 3 months of 2020 so you can see how simple market signals could have helped you in the most recent downturn. We know that we came into the year with a strong stock market, so we had a green signal for the majority of January, but on January 27th, the signal went yellow for a couple of weeks. We went back to green in the first part of February, and I warned my newsletter subscribers on Saturday, the 22nd of February, that I felt like the market was starting to roll over and that things were changing. And so I gave people a heads up right here over the weekend, and I told them that if the market continued to sell off, that we would probably see at least a yellow signal, if not worse, the following week. And that's exactly what happened. On the 24th, the simple market signals risk signal went yellow. So on the 24th, the signal went yellow. The general trend indicator went negative on the 25th. And then 2 days later, the signal went red. The risk signal went red. So think about this. All in 1 week, just a few days apart, we had a yellow signal. We had the general trend indicator went negative. And then we had the risk signal went red on the 27th. That was Thursday. All right. And by the way, this general trend indicator is a positive negative signal, and it operates totally independently of the risk signals. It's just trend. So the general trend indicator gives you still another way to monitor and control risk in your portfolio. And guys, that general trend indicator had been positive since October and then went negative. And we can see here that the market fell from there. And a subscription to Simple Market Signals is just $19.95 per month. That's less than 67 cents per day. It's billed monthly on your credit card. There are no contracts. You can cancel anytime, and your first 2 weeks are free. And guys, I want to set realistic expectations here. Okay, the newsletter isn't fancy. It's effective. It's plain text, no color, no fluff. And please note that due to international compliance regulations, you must be at least 18 years old and a citizen of the United States of America who is currently living in the U.S. in order to subscribe to Simple Market Signals. And again, that is just due to international compliance regulations. Now let's recap what you will get with your Simple Market Signals subscription. You will get the weekly emailed newsletter with all of the contents we just talked about. You will also receive special midweek updates when warranted. So if there's a major signal or direction change in the middle of the week, we're not going to wait until the weekend to get you that information. We're going to get that information to you as soon as possible via a special midweek update email. The best fit for a Simple Market Signals subscriber is an investor or trader with at least a 6 to 8 week plus time frame that they're focusing on. If you're a day trader or a really short-term trader, Simple Market Signals may help you a little bit, but the reality is Simple Market Signals is designed for those investors and traders with at least a 6 to 8 week plus time frame that they're focusing on. And if you would like even more information about how you can benefit from Simple Market Signals, I have the following videos that will be linked in the description box below this video. And to subscribe to Simple Market Signals, you just need to go to the website that you see on the screen here. That's https://simplemarketsignals.com. It'll take you about 4 minutes to subscribe. It's that easy. Once you reach the website, the first thing you will need to do is accept the cookies. Please notice that due to international compliance regulations, you must be at least 18 years old and a citizen of the United States of America who is currently living in the U.S. in order to use this website or our services. and that is just due to international compliance regulations. All right, so to get started, all you have to do is click this green button, and that will take you to the product page, and this explains, of course, what you get with your subscription. And then just make sure that that says 1, because if there's more than 1 in there, if you have a 2 or a 3, you'll get multiple subscriptions to the service, and you only need 1. Click the Sign Up Now button, and that will take you to the checkout page. Once you're on the checkout page, fill in the necessary information, anything that is required, including the email address. Keep in mind that this is an email newsletter, so we will have to have your best email address on file, and make sure this box is checked, because that's how your email address gets into the system. So if that is unchecked, your email won't get transferred into the Simple Market Signals system, and you won't get your newsletters. So please make sure that box is checked. And then, of course, just double check, make sure that your monthly total is going to be $19.95 a month. Remember that your first 2 weeks are free, so your first renewal date will be 2 weeks after your subscription date. Fill in your credit card information. You will need to accept the privacy policy and check that box that says you've read and agreed to the terms and conditions. Click the Sign Up Now button, and it's that easy, guys. It's probably going to take you maybe 4 or 5 minutes total to fill in everything and subscribe to Simple Market Signals. Now, when you subscribe, okay, understand that everything is tied to your email on file. All right, so once you subscribe, you go out to the website simplemarketsignals.com, and it'll take you maybe 5 minutes to subscribe. It's pretty easy, and you just follow the prompts, and then your email on file is then going to drive everything going forward. This is an emailed newsletter subscription. That's how we disseminate the information, and you should get an immediate emailed confirmation of your subscription. You will also receive an automatic welcome letter that is automatically generated once you subscribe. So if you don't get that welcome letter beyond your confirmation, okay, of the subscription, if you don't get that welcome letter, if you don't see it in your in-basket, then go check your spam, your junk, or your promotion folders, especially in Gmail. Having a lot of people that are having the newsletters and everything coming from Simple Market Signals going into the promotion folder. So please make sure that you check your spam, your junk, and your promotion folders. And also understand that the newsletters go out on the weekend. All right. So the goal is to get it out Saturdays by 2 p.m., but it could be any time over the weekend, depending on how long it's taken me to do the research necessary for that week's newsletter. But I try to get it out by 2 p.m. Eastern Standard Time every Saturday if I can. Again, earlier if I can make that happen. And then the next edition, right, once you subscribe, understand that the next edition, right, so if you just subscribe on a Monday, Tuesday, Wednesday, whatever, the next regular edition is going to be set out on Saturday. All right, and then once you subscribe, we will send you, as soon as we can, the latest edition, but we have to send that out manually. So just be patient with us. But again, within a day or two of your subscription, if you don't get this latest edition, then go back and check your spam, junk, and promotion folders, because it's probably hidden in there. All right, so you should get the automatic welcome letter, and then the latest edition within the next day or two of your subscription, and then again the standard newsletter goes out every weekend, but we try to make it no later than 2 p.m. Eastern Standard Time on any Saturday.